Okay, we are off and running. Welcome to the All In Advisor Access Podcast. I'm your host, Blair Barton, Senior Financial Advisor and CEO of Auxiliary I&I Financial Services. And as always, joined by Eddie Donan of the Eddie Donan Real Estate Team, Century 21 Heritage. Welcome in, my friend.
Thank you so much, Blair. How are you doing?
I'm great, man. Was celebrated my birthday yesterday. Pretty much just ate all day. Like I worked, I worked all day, but it's like, there was breakfast, lunch, and dinner, like all really, really favorite foods of mine and stuff like that. So I was a little bit worried about jumping into my suit this morning, but all fits well and all is good. And feeling great. Got some sunshine out there today. How about you?
It's pretty good, man. The secret is buying those suits that are stretched, those stretch fabrics right now. That's the best kind. They're a lifesaver. Or just don't wear a suit. Just wear a dress shirt. You can always unbutton it a little bit if it's feeling snug and it'll make you feel good. No, man, everything pretty good. Been keeping super, and we'll talk about that later, right? Because the market right now, it's absolutely nuts. It's insane. Like nothing I've seen before, for sure. It's a one-time thing. It's probably, I would say, considerably hotter than it was 2016 and 2017, where we had that huge spike. So it's pretty crazy. But happy belated birthday! I know you were working because we were talking, so you're always on the go, and that's important. You take a day off.
Well, that's funny. So a couple points that you made there. So to your last point, that don't take a day off, I actually got in trouble from my colleagues. Because I hired somebody yesterday. Really excited about this gentleman, and I remember I promised one of my colleagues I was going to take the day off. I said I'll just do a couple calls and talk to some people, make sure everything's online. But that's pretty much it. I'm going to keep it light. And when I let them know I finalized a new person coming on to the team, they're like, I thought you were going to take the day off. So I ended up working pretty much the whole day till about 6:30, but I still got to see my family and spend time with them throughout the day. I poked my head in, and like I said, usually I only have one meal a day. I had 3 yesterday for sure, at least. So and stretchy, back to the stretchy clothes. Stretchy clothes. A couple of years ago, I replaced all my denims with the stretchy ones. They're just too good to give up, man. They're amazing. Yeah. So I donated.
They'll be a size 32, 34, Shout
out to Scotty. Shout out to Scotty B.
No problem. So listen, going back to your work thing, a lot of my contacts that see this video, they don't know much about you. So I want to start off by putting you on the grill and just finding out a little bit more about your business. And even though it's your podcast, and it's more for the people that you tag me in these things and people have been watching the videos that we do together. Just kind of want to give them an idea. Obviously you're senior financial advisor. You help people with investments, insurance, all sorts of insurance, right? And you help them plan for the future, for retirement, for whatever their needs may be. Just for everyone watching, Blair has helped a lot of my clients save up to get a home, right? Because it's really, really hard. You have to have a financial plan in order to save for the down payment, which is super expensive right now. And once they get a home, he helps them secure their finances in the event, God forbid, something happens, they're protected, their families are protected. So what is new with your company? What's going on with Auxiliary I&I?
Hey, well, that's thanks for taking interest in me. There we go. One of the reasons we do this podcast is really just to spread the awareness and the size of our company. I think a lot of people think that because we are a newer company, that there might be growing pains, this or that. That's certainly not the case, and that's why every single week we'll bring on somebody like a partner of ours that we've gone above and beyond with, that have worked with us intently. There's a lot of companies that are partnered with similar companies to us, but they don't build the relationship. We do use them as the resource. That's one big thing that we really focused on, was we want to take it up a notch with each of our partners, and we really have done that. We've got some amazing stuff on our site with our partners, and there's a lot more coming in the next few weeks that I'm super excited about. But who are we? So we started off actually as an injury and disability firm. So we're helping a lot of people that may have been injured in an accident, let's call it brain damage. And a lot of these times these people will end up with a settlement that they don't really want, they don't know what to do with. And so when they come to us, we'll help, put it in all the proper accounts, make sure it's protected from, people asking them for loans, different family members coming out of the woodworks because, I heard so-and-so got $500,000.
Right.
And it's really easy to do that. And a lot of the times, there'll be a power of attorney designated, which is incredible because you need someone that you love and trust to be there for them. So yeah, we work with them, make sure they can still apply for a lot of their government grants, by not having everything in one account because there are limits for that. But since then we've really spread out. We work in wealth management, which is obviously the 1% of Canadians that are really, really, millionaires. And we find different strategies for them that they're not able to get at most places. We work with business owners to help make sure that they get group benefits, proper insurance coverages, and again, we help them with their finances as well. So we do everything, and we will continue to keep growing in that regard.
Yeah, that's cool. And I know you're putting a lot of hard work into the company, and you have a lot of experience. You just started your own company not too long ago, but you do have a good wealth of experience in the financial industry. You work for big name companies. We're not going to go into them right now here, but you definitely have a track record, which is good. I also heard that you were doing some hiring on your birthday. Tell me a little bit about that, and what is it you're looking when you're bringing on, I guess, financial advisors? What are you looking for when you're hiring?
So we're definitely looking for people that want to build a practice, not build a business. Those are two different things. Generally, when a company tells you they want you to build a business within an organization, they're looking at just recruiting different people to come on. For us, it's more about people that are experienced, looking to make a difference in people's lives. That really just want to have a resourceful practice, and that's what we offer. So we have a wealth planning department, insurance specialist department, high net worth department, and we can really rely on those things. And the great thing about it is that we're able to offer our advisors full compensation on that stuff without having to pay these people. It comes from the company. It doesn't, these people are on salary on our team. So it's it's a step ahead of anywhere else I've been. That's
good.
For sure. Yeah.
That's good. That's good. And I guess that's an important thing when you work for different companies and you have different experience, you're able to see what works in bigger organizations and what doesn't. And when you create your own, you're able to grab the best parts and kind of mesh them together and make them work. So it leads me to my next question. What separates you from the competition? Why should I go to Blair Barden? Why should I go to Auxiliary instead of going somewhere else?
Well, that's a great question, and I think I touched a little bit on it in the last answer. But we offer full support for our advisors. Okay, so when an advisor comes in, we the leadership will take them under their wing, show them the systems that are in place. We're not asking them for their first few clients money, which a lot of companies are doing these days. And it's sad that that's how they operate, but because you want people to come in, you want people to work hard, build relationships, get clients, and make money for their families, right? And that's the whole thing for us. But I don't think that we have any competition out there. I really don't. When people say that, I think we've really developed a culture and a system. Like I said, with all the resources that we have, that doesn't cost them anything extra. There's nobody that's doing what we're doing, and we're going to be the best at it. And we hire for quality, not quantity. So if we don't feel like you're the right fit, we can certainly suggest a different firm for you. But we're looking for people that want to work hard and continue to grow.
Listen, I got a text message asking me about pyramid schemes in your industry, right? And I had a conversation with a past client, and it went something along the lines that he felt one of his advisors was more interested in turning him into an advisor himself, and he didn't seem as knowledgeable as to the products or to the industry itself, right? So I'm not too familiar with this, to be honest with you, but I have heard that some companies are more pyramid companies. I'm not going to call them schemes. It's a business model. I think pyramids are certainly a business model. I'm not going to say it's a scheme, but the question exactly was, how does a consumer protect themselves choosing the right company to give the business to that's not really a pyramid company or a pyramid scheme, as this gentleman referred to it?
Well, yeah, that's a fantastic question, and you know, the pyramid scheme thing, like you said, it is a business model. You know, normally called MLM or something along those lines, and you know, that is when I talk to people, that is one of the biggest worries out there is we just want to make sure you're not part of a pyramid scheme. Well, I can assure you, when dealing with us, you're not. You know, having been in that environment before, I can tell you it's extraordinarily unhealthy to kind of work into those systems, and you'll know. You know, that, like I said, they talk about building a business, which is all on recruiting first. It's all about taking, you know, a certain amount of their first premium. So the first thing that I would say is, you know, they will normally try to recruit their clients. So, you know, after they kind of bring you on as a client, and they'll invite you to something. It could be, it's normally out of business hours. So if you're ever invited to something that's after hours, that isn't like, you know, sometimes we'll throw an event at like, you know, Buster's or whatever, Dave and Buster's, and people can just come have fun. That's it. But what these things will do, they'll have like a business overview, for example. If it's in the evenings or on the weekends, that's a pretty good indication that if it's not done during business hours, you're looking at people just trying to recruit anybody. And it's not anybody can be. Yeah, exactly. Yeah, you're not. I think the whole thing, honestly, I know we talk about being a business model. I think it's, you know, I think it's repulsive. It's too bad that it's part of our industry. You know, like but it's just the reality of the thing that, you know, just keep an eye out for those things. You know, why would somebody try to hire you on when they're bringing you on as a client? You know, look for a business that is more client centric as opposed to growth. And it's not too hard to find. If, you know, check out the company on Glassdoor or anything like that. And if you see anything to do with growth or pyramids or any accusations like that, and then a big long explanation by the company after, then you're pretty much looking into what you would, you know, what has been referred to in this case as a pyramid.
I mean, that's true. And in every industry we have, obviously, in the real estate world, brokerages are big on recruitment. I mean, I work for a brokerage. They want to get hundreds of agents, thousands of agents, because they take a portion of our commissions. It's fair. But I do like to work with brokerages that are client-centric, right? And at the end of the day, the client is the person who's buying or selling a house, and the second client is the agent for the brokerage, which is ourselves, right? And there are some newer brokerages, some brokerages out there that are very focused on recruitment, and there's nothing wrong with that, right? Because they have that level of compensation. Let's say I recruit you to get your license and you come work in our company, and I will make some money off of your first couple of sales, and that's fine. But I find there's a thin, fine line between me being now a realtor, somebody who helps people buy and sell residential real estate, to just being a full-on recruiter because I'm promised by the company that I'm going to make more money recruiting an agent than actually selling houses. That's where I find the problem is in most of these places, right? Like if your job goes from buying and selling residential real estate to recruiting people so they can sell for you, then it seems like you're no longer client-centric, right? So the consumer in general is not going to benefit from me having 100 agents under my wing, right? Quote unquote, because they're not getting that high level of service and buying and selling. They might as well go somewhere else. So that's what I find it's an issue as well.
Well, yeah, I mean, you know, definitely some great points there. You want to, every business wants to grow. That's the idea. And you know, I'm certainly not saying that here at Oxy that we wouldn't take on, you know, great people that want to come in, and or if I see somebody that I'd like to work with, to maybe extend them to come in and to an interview, you know, obviously a Zoom chat, given the times we're in, and talk about to see if there's an opportunity with us. But I mean, if you're not, the thing with the financial industry is it's a very, very difficult industry to work in. There's so much knowledge that you really need to build up the partnerships and have the resources available in order to be successful, and have a really patient person working with you. But most people don't make it. And so if someone's asking you to come work in the financial industry and you're, a plumber or an electrician or, working at McDonald's, like, chances are you're not going to be able to make that switch. It's
Right.
1 in 3 people, I think that's the last stat I heard. 1 in 3 people make it that never intended to be in the financial industry, that got talked into it, end up not making it. You have to have a desire to be in this industry to really survive. And
Right.
that's just, there's the odd person that, really, really finds a way to jump into it and grow. But, the numbers suggest that if you're not already in it or you never want to be in it, don't do it.
That's interesting, man. That's what I like about this podcast. It's not all about, pushing a certain thing. I think a lot of people watching this have gotten an insight into the industry a little bit better, how it works, how you guys get compensated. And that's something that I think a lot of your audience is going to have, they're interested in, for sure. I'm interested in it. I want to know how it works. I didn't know about these, recruitment MLM things that much about until this guy brought it to my attention. So it's good that you answered the question. So really, really appreciate it.
Yeah, no problem. I think, transparency is one of the most important things when doing business. If you can't trust the person that you're working for or taking advice from, then what are you doing?
Yeah.
And there can't be too many hidden agendas, and that's the thing that I found, in those environments is it's not about people. It's about taking advantage of people. There's numbers, and you don't want to really have anything to do with that. And I'm really glad that my firm doesn't has never been involved in any of that activity, and I never will.
That's good. You got to keep your integrity. You got to follow the business model that you feel is right for you. And hey, listen, it's working. It's working for you. But speaking of numbers, I wanted to keep this short, but I do want to jump into some real estate numbers for you, because as I said before, it's just absolutely nuts right now.
Yeah. How's the market? Like, what's going on?
Listen, it's pretty crazy. So I'll give you the figures, but I think anybody can just read figures on the Toronto real estate board. Listen, you can Google this and just Google Toronto real estate market for January, and then you'll hear everything I'm about to tell you. So I'm going to give you perspective, right? 2020, okay, prior to COVID, prior to the lockdowns, it was a very, very crazy month of January, February, and beginning of March. Okay, the market was definitely heating up. We had a lot of multiple offers, a lot of showings, low inventory, lots of buyers, fairly low interest rates. So the market was super heating up. Okay, once the pandemic hit, we're talking about March, April, May, 2020, June, market slowed down. Not pricing was still pretty high, but market slowed down number of sales because we were locked down. People weren't confident buying or selling. They just were concerned about their health, and not a lot of transactions happened. Now, after the first lockdown, so around June, July, August, the market just spiked up again. And it's been a continuous progression of that, right? We've had some of the hottest Novembers and Decembers in history. We talked about that in one of the previous podcasts. And now 2021 has been absolutely insane. I've never seen anything like this. Okay, even 2016, a lot of people refer to 2016, early 2017 as the peak of the market. Everything was so hot with multiple offers. I would say from my personal experience, the beginning of 2021 has been even hotter. Okay, every transaction I was involved in January had a minimum of 6 to 7 offers, minimum, right? I've been involved in not even transactions because I didn't get the deal done, but I've been involved in offers as high as 32, 33 offers on a single property. So the problem that we're experiencing is a high demand for housing. Before, this used to be pretty much standard in Toronto and some parts of the GTA, extending north, Bradford. It's always been hot. And we talked about this. You were looking there, Durham region, certain parts of Durham region, Peel, of course. But now this high demand has spread all the way as far north, further up north in Orillia. You're getting multiple offers in North Bay. I have colleagues there that are dealing with clients I refer to, like North Bay. You're getting multiple offers. Windsor, one of the hottest markets in Ontario right now. So this is a phenomenon that I would venture to say is Ontario-wide. And we're not talking about some multiple offers. We're talking about full-on massive bidding wars like the ones you were getting in Toronto. So Right now, you have a high demand for property. Interest rates are super low. I think the reason why it's spreading all over the place, it's number one, people feel it's because of the pandemic. A lot of people are working from home. They can now work from wherever, which is partly true, but I think it's also affordability, right? Just bottom line, everyone would like to stay in Toronto. Prices are pretty high. So you're gonna do what we say in the industry, you're gonna drive until you qualify. So in essence, before I get into the numbers, the market's super hot. You have a lot of buyers, not a lot of houses for sale. That creates bidding wars. And the bidding wars we're getting right now, it's pushing the pricing extremely high.
What do you think is fueling the growth?
Well, let's look at the numbers right now. So to give you an idea, in January of this year, so January 2021, we had close to 7,000 sales. We had 6,900 sales done in the Toronto real estate board. Okay, if you compare it to 2020, which I told you was a hot January as well, we're up 52.4% in number of sales. So the market is up 50% in number of sales, January 2020 to January 2021. I mean, all things equal, there was no pandemic back then. Right now, we're in the middle of a lockdown, and our number of sales have still gone up 50%. That's insane. Number one. Number two, pricing. Average price in the GTA right now is up 15.5% compared to last year, 2020, January 2020. So that's a massive increase. We're looking at the average sale price in the GTA. This is not Toronto, this is in the GTA. It's about $968,000 right now for a home. Okay, last year, January 2020, again, a hot market, the price was only $838,000. When I say only, it's a lot of money, but it's gone up 15.5%. Okay, and we have to understand that in the surroundings that we're in right now, it's pretty odd. We're in the middle of a pandemic. We should be home. I can tell you, most people aren't home. They're buying houses, but we should be locked in at home, and the market is still exploding. So I think what's really fueling this is just built up demand, right? When the market corrected itself in 2017, I never felt the correction as far as interest goes. And when I say interest, it's consumer interest. People were always looking to buy houses. They stopped buying houses for a period of time because of government intervention, right? They felt like, listen, now the government has done this, the market's going to do this. So I don't want to buy right now if I can buy here. Okay. But there was always interest. I was always swamped. We weren't doing as many deals, but I was swamped. People like, you know what, like I'm looking to do this, looking to do that. So I always felt that it was just a matter, that interest there, that pent up demand, it's just a matter, it's going to channel one way or another. And then once people started noticing, hey, listen, the world didn't fall apart, the market didn't crash, the interest rates are super low, maybe now it's time for me to jump back in and continue my search. And that's what's been happening, right? If you look at resale numbers, there's no inventory. There's no houses, there's very little houses for sale. If you're buying a house right now, good luck, because you're going to be competing with 10, 12 other buyers that want the same product you want. And as a result, you're going to have to pay more than those 10, 12 other people for you to get that house. It's logic, right? If you only have one insurance policy to sell to 5 clients, you know, the company's you're going to sell to the highest bidder. That's pushing the price up. And then the next policy that comes up, I know it doesn't apply to your industry specifically, but it gives an example. The next policy is going to be higher, right? Because they know there's 5 or 6 other people that are looking to get into it. So low interest rates are definitely the fuel. High demand built up from the last year, and the low inventory. If you were to go right now to a builder, they're all sold out. Most of them are sold out. There's nothing that you can buy. So that's what's really fueling this momentum and keeping it going for God knows how long.
Well, 2 things. So a point and a question. So
yep.
You can buy as many insurance policies as you like off me. We're good there. No. And the question is, you know, will it cool down?
Absolutely. Absolutely. And this is, again, a matter of supply and demand. Right now, there's a high demand, there's low supply. Eventually, more things will come into the market, more houses will be built. And let's face it, realistically, there's going to be a point if pricing is so expensive that it's going to filter out a segment of the market. There's going to be a segment of the market that perhaps first-time home buyers, I'm not saying this is going to happen, but it could happen. First-time home buyers are no longer in the picture because they can't afford a home unless they're getting a lot of parental help, right? There's nothing really affordable right now in Durham region. Just to give you an example, I know we met in Oshawa, right? I remember you used to live in a bungalow, a semi-detached bungalow on Waverly, right? So to give you an example, just on affordability, let's say a mildly renovated place or semi-detached, just like you had upstairs in the basement apartment downstairs, would probably trade right now for around $750,000, right? So how much money would a first-time home buyer have to make to qualify for a $750,000 home? You know, the down payment, the monthly payments, it's not easy. So eventually, once the market gets so hot, if the pricing continues to increase, a segment of the buyers will go away because they will no longer be able to afford. That cools down the market. And also, it makes moving more difficult, right? Because now if you look at downsizers, people would think that they would sell $1 million home and go to a $400,000 home in Oshawa or Hamilton or Waterloo. Well, those don't really exist now anymore. There's nothing for 400, 500. The starting price in most of these places for a decent freehold is about 600,000. So people will consider more moving. So I think eventually it will cool down, and it cycles. Real estate cycles like the financial cycle. You have your peak right now. We're peaking. Eventually, we'll get to a peak, and it will come down. Now, I don't think it's ever going to come down to what people feel it will come down. That's the reality. People feel like, well, right now, average price is $1 million. Let's say in Toronto, it's going to come down to 600,000-700,000. I don't think we're ever going to see that unless we have a huge financial crisis. But I don't think we're ever going to see that. I think you're going to get fluctuations in the market, maybe 5, 10%, it goes up, 15%. But if I'm telling you it's gone up 15% year over year, let's say the market goes down 15%, we're still left with where we were last year. So I think it's pretty strong. And to that point right now, growth month over month, what we're seeing right now is from the month of December 2020 to January 2021, we're looking at a price growth of almost 4%, 3.5 across the board, but almost 4%, in some places 6%. So meaning that houses are going up on average about $30,000-$40,000 month over month.
Hey, well, you know what? And this is what my company is all about, and what this podcast is about is strength and partnership, and everything that you just laid out, you know, really shows to your strength and why, you know, you're other than just being, you know, a really good friend for a long time. Why I work with you, why you're on the podcast, really shows, you know, you're really showing your strength and understanding of the market. And that's, you know, that's really important why we work together to help people achieve these goals together. And I really appreciate you. And I just want to finish off with one thing, because I get asked this a lot, and I actually had this in my inbox about 4 or 5 times for the questions, was one tip for first-time home buyers. Just one, and we'll wrap it up.
Just be patient. You know, in reality, there's nothing wrong with renting. There's nothing wrong with renting a little longer until you're ready. So patience and preparation. Be prepared. Go to your mortgage broker at least every year, see what your position is, if you're able to buy, see what your financial situation is like. And if you're ready, buy. That's the thing. I have a ton of first-time home buyers that wish they would have bought last year, but they didn't. 2 years ago, but they didn't. So you don't want to be an eternal first-time home buyer. If you're ready, if you're in a financial situation that you can do it, go ahead, buy. Buy today. That's my advice. Don't wait, right? Now, however, I don't want you making a mistake of spreading yourself too thin, having to get funny mortgages for you to qualify. You know what I mean by that? And doing things that will put you in a financial hardship to get a house. That's not the right way to do it. But if you're ready, and the only thing that's holding you back is fear, then forget about it. Ask anybody that bought a house 5 years ago, because life works in 5-year cycles. Don't ask anybody that bought a year ago. They're going to be ecstatic. Ask somebody that bought a house 5 years ago and ask them how they feel about their decision. Ask somebody who bought 10 years ago and ask them how they feel about their decision. It's always the right choice. You can't really think forward in the short term. You have to think in the long term. In the long term, it's always going to be a better move for you financially if you're ready to do so.
Well, yeah, if you're ready and you don't do it, you're going to miss out on an opportunity.
Absolutely.
And you got to lock in price. That's what we always say about insurance. And people say, you know, I think we're going to wait on replacing our mortgage insurance. Okay, well, you know, it's going to get more expensive. You know, the best time to get it was yesterday. You know, and that's the same thing. So if you're able to do something that's going to be better for you, and you've been advised that's going to be better for you, it's time to make that leap. And you know, you're not going to regret it. You're not going to regret doing smart financial things, smart real estate things, and whatever. So
100% agree.
All right, well, that's going to wrap it up. Just want to tease next week a little bit, and you don't even know this, and nobody knows this but me because I'm in conversation. But next week is going to be for the entrepreneur, people looking for that personal growth. We are going to have one of my mentors on, and I'm very excited about it. I've been known this gentleman for just about as long as I've known Eddie. So you're going to call me right after this, I'm sure. And but thanks for tuning in. Every Thursday at 6 p.m.
That's awesome, dude. Thank you so much. It's been a pleasure. Great insight, man. Had a lot of fun today, and congratulations on the show, on the podcast. I think you're doing great. Feedback is really, really good. So keep it up, and definitely look forward to next week to find a little bit more, find out a little bit more about that personal growth.